Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second consecutive indecisive spinning top yesterday. The range was defined by the support at the April 2017 low at 105.68, though once again the market shied away from really testing it. Whilst above, well, the 2020 low at 106.35 capped the market, but not without being penetrated once again. Further down we have the significant February and March 2017 low at 104.92, and above we have the April 2020 low at 107.25 that capped the high of last week. Prices are still sitting patiently above the top of the previously influential upper time, currently 103.89 of the broken January to May 2021 bearish Andrews pitchfork, which carries on increasing the questions about its future. As I've said many times already, I would normally retire such a pitchfork after 2 consecutive closes over or under it. But in this case I've made an exception, not just because of it maybe becoming support, but for 2 other reasons. Firstly, this pitchfork has been broken many times on the lower time, currently at 96.48, yet each time it has repaired itself. Secondly, because of its long duration and lifespan, over 1.5 years. I thought that there may be perhaps more to give from this pitchfork, so I'll keep it on here for a little while yet. Last week's rally managed to reach up to the April 2020 low at 107.25, but stopped short of reaching target X3 at 107.65. The secondary harder, and to be honest much harder, to reach target for the late September to mid-November ascending wedge pattern. This pattern is highlighted in dark blue on my daily chart. So far today, well, nothing much, capped by the 2020 low at 106.35. And looking like an indecisive spinning top, possibly an indecisive doji cross right now. Cable, aka sterling against the US dollar. A third consecutive indecisive pattern yesterday. This time it was an indecisive spinning top. Prices ended up this time higher on the short moving average, currently at 121.87 of all places. Below we have the Fibonacci and other closing based congestion in the 121.50 zone, and below that the slowly declining long moving average, currently 120.74. The market continues to be very shy of trying down to the combination of the slowly declining long moving average and the May 2020 low at 120.73. Meanwhile above we have the June 2020 low at 122.48, and beyond that we have the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16. Overall, the late September to late November ascending wedge pattern, currently 118.91 to 120.27, is still the most relevant pattern influencing the market here. I've highlighted the trend lines for this pattern in dark blue to help visualize what is going on. Prices last week managed to reach the primary target for this pattern in the 124.20 area, though we still have open the secondary harder to reach target X3 in the 128 even area. So far today, a small reactionary move lower, below the short moving average, and back towards and just under the Fibonacci and other base congestion in the 121.5 zone. Euro sterling. An immediate countering bearish harami yesterday, but one that could also be seen as an indecisive spinning top. The market closed right on the April 2021 high at 87.19. This continues to be pretty much a neutral response to last week's weekly key reversal up, though it is still early. Below we have the lesser Fibonacci line at 86.98 and the more dynamic, though still flatlining short medium moving average, currently 86.78. Looking above, well, we have some fairly clear air up to the peak of the old November roof pattern at the 50% Fibonacci line of the March 2020 to March 2022 move at 88.51. But I suspect we would need some solid closes over the April 2021 high to generate such a move higher. There is the possibility, now it's remote I grant you, that last few days may be forming a possible horn top. Now so far today, a move higher and also a dip back below the April 2021 high at 87.19, though the high, of course, seems to be favoured at the moment. But not really that much. We're still within yesterday's range. US dollar against the Indian rupee. On the surface, yesterday was an interesting key reversal down that highlighted the recent overhead resistances which I'd spoken about here previously and will do so again. But if you look closely, you will see it was also an indecisive doji cross with quite a long tongue on it as well. So it appeared, as I say, on the surface to be yet another follow-on lower to the recent bearish matching and bearish dark cloud cover pattern types that we've seen. But there was more to it than just that. It does not deviate from the market's recent slog along the underside resistance of the middle time, currently 83.06, of the mid-September to mid-November bullish shift pitchfork. You can see the tines highlighted in bright red on my daily chart. Below we now have support from the slowly rising short medium moving average, currently 82.07, which interestingly late last week made a golden cross with the rising short moving average, currently 82.19. Further down we have some interesting support from the open and close area around 81.90. But overall, prices are slowly approaching the mid-October all-time high at 83.26. And it will be interesting to see what happens when the middle time intersects with this high next week. So far today, much higher open, though still within yesterday's range. However, that open has not really been exploited, as we are still, as I said, within yesterday's range. US dollar against the Brazilian real. Just when I started thinking and doubting as to whether the late June, late September mildly bearish shift pitchfork was any good, along came yesterday with a bearish long black Maribosa and second bearish black crow, following on from the previous session's bearish engulfing pattern, but which, more importantly, saw the cap of the action right on the upper time, currently 532.31, of this very same late June to late September mildly bearish shift pitchfork. The market dropped down through the following supports, which are now resistances. The combination of the largely sideways moving short medium moving average, currently 526.78, the 50% Fibonacci line of the May 2020 to April 2022 move at 527.37. This is the 50% Fibonacci line that I've often mentioned as not that good looking a support compared to the 50% Fibonacci line of the good looking March 2021 to April 2022 move at 522.76. Well, in the end, the market zooshed down through both of those, plus finally the Fibonacci congestion at 520.27. Prices dipped as far as just below the small late November congestion in the 518.5 zone, before closing just under the Fibonacci congestion of 520.27. Now, question is, what next? Well, if this move is to be sustained, which we ought to know by the end of this week, then it would in 2 days have justified the weekly key reversal down we saw 3 weeks ago. Additionally, it also leaves the door open for us to look at the whole of the action in the last 3 and a bit weeks to possibly be seen as a small bearish halfway hesitation. And if we do have such an action, then the potential on the downside would be in the 512.5 zone, which would tie in nicely with where the slowly rising long moving average would be, and that's currently at 512.28. US dollar against the Mexican peso. A very interesting combined key reversal down and bearish engulfing pattern yesterday, if only just on the latter. The top was once again capped, if on a closing basis, by the declining medium moving average, currently at 1983.32, for the 6th time in the last last week and a bit. Meanwhile, the base of the April low at 1971.68 was once again breached, but held on a closing basis. What was more interesting was the work done by the better support below from the declining short medium moving average, currently 1965.67, and the nearby middle time, currently 1964.19, of the March to May bearish shift pitchfork, the one highlighted in dark blue on my daily chart. Overall, I am still pondering as to whether the action since late September, including the crossovers seen in late October, may be, just maybe, a possible bump and run reversal bottom. We have seen enough build-up over the last 2 and a bit weeks to qualify it, but it would need a strong break above the medium moving average and ideally above the declining long moving average, which is currently at 19.9907, to justify it. Additionally, and this also lines up with this possible bump and run reversal bottom idea, it is whether the action over the last 3 weeks is a topping action of sorts or a possible bull flag. I need to observe some more and think some more on all of this. So far today, a move up to the top of yesterday's main range to the 1976.60 area for a move back down to just below the April 2022 low at 1971.68, but nothing more than that at this time. Thank you for listening. The short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. And here comes the final bit.